Welcome to Trading Nation. I'm Courtney Reagan. Joining me now is independent bank analyst Mike Mayo. Mike, what did you make of this morning's earnings? We got a couple of heavy hitters already right from the gate.
What a way to start. What my takeaway from the first day of large bank earnings would be Wall Street is beating Main Street. So the large banks with a Wall Street connection performed better. You saw double-digit growth in capital market activities. That's versus the fourth quarter and a year ago. You saw double-digit growth at those banks in terms of EPS. You see debt underwriting really doing well, and at a time when Main Street hasn't done as well in terms of the worst loan growth in 6 years, margins not increasing as much as expected, mortgage has slowed down, and a flatter yield curve. At a time when Main Street hasn't done as well, the Wall Street side of the bank has picked up the slack. So if I were to say there's one word describing bank earnings so far, that one word would be disintermediation. The disintermediation from lending markets when it comes to corporate lending to capital markets when it comes to the Wall Street bank. So the largest players, where they lose on the corporate lending side, have picked up business on the capital market side.
And I understand there's a couple other themes that you're looking at. They all start with the letter C.
Yeah, I would say number one would be the capital markets trends. And JP Morgan said the backlog is good. Of course, sentiment will drive capital markets ahead. Number two would be capital. The strength of the balance sheets are the strongest they've been in a generation. And the share count declined by 3% from a year ago. So that's a theme that should continue. The third C would be credit. And credit quality at banks remains very strong. It might not be great anymore, but it's still good. And the fourth C would be cost control, which frankly was not as good as I expected, not as good as it probably should be. So that's an area to watch. But the first quarter often has, different types of noise in it.
So we had a number of banks that reported today, but overall, who would you say is your favorite stock and you would rate potentially a buy, and your least favorite potentially rating a sell? We understand you're independent at this point.
Yeah. Well, what's interesting, after watching the large bank earnings today and seeing stock markets up 6% in the U.S. in the first quarter and up over 6% globally, seeing fixed income markets up a little bit in the first quarter, seeing the debt underwriting improve, seeing equity underwriting improve at some banks, you know who you should buy after seeing the results of the big banks like Citigroup and JP Morgan and some others today? You should probably own Goldman Sachs. Goldman Sachs is a more pure play to some of those trends, especially when it comes to higher equity markets, especially in areas like their private equity and equity underwriting and other areas like that. So that's I know you weren't expecting that as an answer, but that would be a stock to own going into next week.
That's all right. We like unexpected answers. And I guess just to wrap it up, are there any banks that you would stay away from that you don't think are a great buy right now?
Well, what I'd say is one bank that I think is underperforming and should do better is Citigroup. Now, Citigroup, they beat expectations. The returns were a little bit better, but they're still way below where they should be. To that end, I'm going to the annual meeting a week from Tuesday, so that's April 25th. It's in the East Village of New York City, and I have 10 questions that I intend to ask the chairman and the CEO. In fact, those questions are posted on CNBC.com, and the thought is Citigroup's moving in the right direction. They just aren't moving there fast enough, and I think they need a greater sense of urgency. And so if we can close that governance gap, and that's the gap between shareholders' interests and the actions of management, if we can close that, I think the stock price could appreciate more rapidly than it otherwise would.
Sounds great. I hope you get the answers to all 10 of those questions. And in the meantime, we can check them out on CNBC.com. Mike Mayo, thanks so much for joining us. Really appreciate it. And good luck at that Citigroup meeting. Thank you for joining us on Trading Nation. I'm Courtney Reagan.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.